Good morning, ladies and gentlemen. It's the 26th of July, 2022, 2023, and welcome to Bedside. Welcome to this week's market commentary. And note that this is not supposed to make you trade with life funds. It's not meant to be a financial advice, but for purely educational purposes. Okay. So first of all, a quick look at the forex calendar. We had a news event on Monday, but like I said, I always love to trade on Tuesday because Monday gives you an idea of what the rest of the week is trying to do. So Tuesday is actually kind of like a continuation of Monday's trend. So by Tuesday morning US time, we get to know what the market is likely to reach for. It helps us in identifying the real bias on the markets. So we will focus on this news event on Tuesday. It's at 10 a.m. So we trade after 10 a.m. Like I said, we identify highs and lows after the news event, and then we take our trade from there. So let's go straight into the chart. So first of all, this is the weekly chart of S&P 500 index. My first target was that I was anticipating market to get to reach last week's high before we run into this second target, which was last week's high. So like I said, this is called top-down analysis. So you start from the weekly time frame and then you move to the lower time frame. It gives you a higher perspective of what we are anticipating market to do. Okay. And the market is in a strong bullish trend. I don't suspect it to come in here any moment now. Okay, so market looks for inefficiencies like gaps like this one. Okay, when you look at this candle and that candle, this is an inefficiency. It hasn't been traded into, so market's likely going to draw down towards that zone. If this week closes, okay, this low and this high between here, there's an inefficiency here, so market may want to come back there as a draw liquidity. Like if I say draw liquidity, as in market is likely to draw there to pick orders and return back to wherever it was to go to. Okay, so let's move to the lower time frame and notice what happened on Tuesday, the 24th of July. So let's start from the 15-minute chart. So notice that the news event was at 10 o'clock, right? Great. So after the 10 o'clock, the 10 o'clock candle on the 15-minute chart, you notice that there were highs and lows formed. Okay. And it becomes more clear when we move to the 5-minute chart. So that's at 10 o'clock, Tuesday 25th. Okay. So notice that after the news event on 10 a.m., like I explained, we look for highs and low, any high and low after those news events to be taken out. So this, if I say high and low, a swing. So this is 10 o'clock. This swing was formed. That swing high was formed. So we first of all wait for any of the swings to be taken out first. So this one is taken out first by this candle at 10:30. So once it's taken out, like I explained, we wait for breaking market structure. Okay. So once it was taken out, our mind goes right up to this next swing. Okay, so once the swing is broken by this candle, 11:30 candle, okay, it breaks above it. So we wait for the market structure. I taught in that earlier video, you can go onto my YouTube and you see market structure video there. So right after that, what did I say you look out for? A gap, fair value gap. Now here comes the gap. The gap presents itself nicely. Notice how the price comes into that gap, reverses, comes again, reverses, and then trace all the way to our weekly target. So like I said, entry would have been here, stop loss would have been 40 pips. So that's somewhere here, stop loss. And TP is 50 pips. So 66 plus 50, that's 71. So TP would have been somewhere here. But you can hold to our weekly target. Look at it, delivered nicely. Look at it. So guys, first of all, you need to allow the news event to finish its course. When you don't do that, you can never tell the direction of the weekly time frame, because somebody may ask, so how do I know if the weekly candle is going to expand higher or lower? It depends on what happens after the news. Okay. So after the news, you can get an idea of what the market is likely to do. So this what transpired. So this happens every single week, and it won't stop. Same form of trading. So I hope you've learned something again from my market commentary. These things happen every single week, so if you've learned something, you can comment below, or you can also subscribe and share with other friends and family. And a quick look back onto the challenge I was doing on my MT5 account. Started with $25,000 account, and I was doing when you go back to the video trading plan, I posted that I was aiming at having minimum $1,000 for the whole month. But look at what my account gave me. I still have one trade, lane stop loss at entry. Okay, so this was Tuesday's trading. These were my losses and my profits. I actually tore the account into pieces yesterday. So that's great. So for the whole month, I started with a deposit of $25,000. You can see $9,000 profits. These are my trades, nothing to hide. Very transparent on my losses and profits. So nice. So until we meet in the next review, I wish you good luck and enjoy your week.